If they revalue and they revalue to even 3,000, I think gold will explode higher because it will be an admission that the fiat dollar has failed. I think the ECB they keep gold on the balance sheet at the market price. So I don't know about the Dutch central bank, but I think, if they change the statutory rate in the US, and that has to go through Congress, I think.
Gold kicked off the new year positively after a stellar 2024, as market participants waited for more clues on the U.S. Federal Reserve's interest rate outlook and President-elect Donald Trump's tariff policies. The price of gold has risen by 27.9% this year compared to the U.S. dollar, its 18th annual gain of the 21st century to date, and its strongest rise since 2007. Financial expert Mario Innecco notes the U.S. has kept gold statutory since 1973 to downplay its value. He predicts revaluing gold to $3,000 could trigger a price surge, signaling fiat currency instability. Higher gold in 2025 is nothing short of a consensus trade. J.P. Morgan, Citibank, and Goldman Sachs all have a price target of $3,000, with commodities analysts citing lower interest rates, momentum, central bank buying, and geopolitical turmoil. But, since the start of 2023, only the last two reasons have driven the gold price. Based on fundamentals, Innecco discusses the possibility of tariffs on gold and silver, which could increase their prices. He highlights Trump's history of running large deficits and anticipates his policies may boost the economy but worsen the debt and deficit situation. The U.S. entered the new year with the debt ceiling back on Congress's agenda, as it determines the maximum amount the federal government can borrow and poses a great risk to the country's economy. The U.S. debt reached $36.1 trillion. If Congress fails to reach a new agreement on the debt ceiling, the U.S. risks default, which could lead to volatility in the global markets, a downgrade of the country's credit rating, and further economic uncertainty. However, Innecco notes inflationary pressures from U.S. fiscal policy and China's loosening monetary measures as part of their economic strategy, cautioning against excessive market optimism. Now we present the clips of Mario Innecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think the U.S. Treasury and the Fed, they've kept gold at the statutory rate of $42.22 since, I think, 1973. After Nixon suspended the convertibility of the dollar or closed the gold window, gold was fixed at 35, then they raised it to 38 and then 42.22, and they've left it there ever since. And people wonder why do they do that? Well, I think Jim Rickards said once they do it to basically denigrate gold, to say that it doesn't matter what the gold price is. We just leave it at 42.22. I think it's worth about $11 billion on the Fed's balance sheet, the certificates. So if they revalue and they revalue to even 3,000, I think gold will explode higher because it will be an admission that the fiat dollar has failed. I think the ECB, they keep gold on the balance sheet at the market price. So I don't know about the Dutch central bank, but I think, if they change the statutory rate in the US, and that has to go through Congress, I think. As I told you before we came on, there's even speculation that they might put tariffs on gold and silver. And that would be good for the price of gold in dollars. And but it just goes to show that tariffs could, in the short term, drive prices higher. And and I think Trump's policies could be inflationary as well. I don't think he talks about bringing inflation down. I mean, we saw CPI is around 2.7. It came out today. But even if you bring it down to 2%, we still devaluing the currency. And Trump, up until 2019, he was running pretty big deficits already, like 5% of GDP, 2019, and then 2020 and 21. I know there was that event that I don't want to say the whole name, but we went to 15% deficit to GDP. So Trump he likes that, and he likes spending. I think he'll probably do things that will help the economy, but the debt just seems to me a really big, elephant in the China tea shop. And even Trump or anyone else, I think, will have a difficult time lowering the debt and the deficit, especially with where bond yields are and interest rates, and the fact that you could see inflationary pressures. And we're seeing, Andy, that China is reacting to this, the talk of tariffs and maybe even sanctions, by coming out with announcing that they're going to cut monetary policy. They're going to be moderately loose for the first time since 2010. They're increasing fiscal policy. So China is trying to inflate and to try to weaken their currency in order to fight that. So I think, it's still touch and go. I'm not too sure. We're going to have to wait and see. And I think, as I said, it's there's a bit too much euphoria, and things might change in the next few months.
In his analysis, Mario Innecco states the shift from the Anglo-American gold dominance as countries face issues like delayed gold repatriation and frozen reserves. He suggests blockchain could enable a transparent global gold standard accessible only to central banks and treasuries. Technically, Innecco suggests that the rising gold price serves as a de facto reset, but a formal gold price reset could occur if global powers like the US, China, Russia, and the EU collaborate, likely following a major crisis. The Bank of International Settlements has reclassified gold as a Tier 1 reserve asset, highlighting its importance. This move, along with various countries' massive accumulation and repatriation of gold, suggests a strategic preparation for a significant economic transformation. The project, known as mBridge, involves BRICS nations aiming to create a new currency system backed by gold that operates outside the traditional SWIFT framework. Saudi Arabia, now part of mBridge, has also been increasing its gold reserves. This shift could lead to a significant rise in gold prices and impact the role of the US dollar in global transactions. Let's get back to the interview.
I think what they want to do first, because the concentration of gold in New York and London, that the reason why it was such a big concentration 50 years ago is because of the gold standard in the 19th century, early 20th century, and Britain ran that, and it was the empire. So a lot of the business flowed through London. So it had the tradition. And then New York and the US stepped up to the plate after World War II. So I think what it shows is that, the world's moving away from the Anglo-American axis, and they've seen that a lot of times you can't really get your gold. For example, Germany, they asked for their gold to be repatriated from the New York Fed. Part of it, I think, not all, and it took like 4 years to get that gold back. We've seen that Venezuela asked for the last gold they have at the Bank of England, and they won't release that. And and also with 2022, what happened, Russia, Ukraine, they froze all the Russian assets. And so that's how I see that. As to the question about cryptocurrencies or blockchain, I'm sorry, that's possible. I guess the blockchain would be a good way to have a gold standard between the countries of the world, because it would keep them honest, because it was supposed to be an open ledger. But I don't think it will be open to the public, but it will be open to the central banks of the world and treasuries, and they can see who has how much. If a certain country starts printing too much money, doesn't have enough gold to back the money supply, people can sell that currency, and the interest rates will rise there, and then people will put gold back to work in there. That's how it would work. So it's possible, but it's only speculation. But I still think they want to have gold as a reserve if they're gonna also not hold as many treasuries as a reserve asset. So that's the other thing as well. I think the rising price of gold is already like a de facto reset, but there could be like a weekend where the powers that be from major countries like US, China, Russia, EU decide to reset the price of gold and much higher, so that they can reliquify the system. That might come after a major crisis, or they might just keep doing it gradually as they're doing it. In my opinion, that the reason the public isn't told about it is because it doesn't work if you tell the public, because you want them to be left holding the bag, which is, I agree, it's not a nice thing. But people in power, they want to have the power, and they don't want people like us, the little people, front running them. And that's why I think there's always so many stories trying to denigrate gold and silver. They came out the other day saying that El Salvador has $3 trillion worth of gold. They said that about Uganda last year, 13 trillion. And the same story about China. I think it's all just trying to keep people away from protecting themselves with gold. So that's why they don't talk about it. Sometimes you hear people like the Dutch central banker, I think it was last year, saying that in a crisis we'd have to revalue it. But how many people do you think read that, Andy? It's only people who follow us who do. And if you try to explain that to people, they're not interested. And most people think that gold is really risky and volatile.
Asia Times' newsletter, Global Risk Reward Monitor, widely followed in financial circles, is tipping gold to reach $10,000 an ounce by the end of the decade. In contrast, Investment examines annual trends in gold demand and a deeper analysis of potential major changes in the global trading system in the coming years. Could the rising prominence of gold signal the end of US dollar dominance, or will traditional financial systems adapt to maintain their influence? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.